Hey guys, this is another look at ZB. We have not been able to break this highs to highs extension on the 30-year yield chart. This black line is the 50% retracement, and yield does not want to stay below it. So, let's just look at the bull and the bear scenario. Um, let's just go right to the hour chart. The bullish scenario is Well, this is a little busy. The bullish scenario is simply it was that we were having a series of ones and twos, right? This was a 1 2, then we traded the long from lows a second time, and that was another 1 2, and then this, should have been a 1 2, and we should have launched in a 3, and we didn't. We stopped right at the 618 line of this original measured move, and we've rolled over in a move that so far could be corrective, right? It could be a 5-3-5 into another long from lows. I can't believe that it would be this easy, just trading longs from lows. But it's traded. We'll get into the bear case, but so this bull nest was too aggressive and didn't work out. So the only bullish scenario I see here would be a five wave move up in a leading diagonal. So we had, this channel that never got followed through. You can see where it was trying to act as support and then broke over the holiday weekend. And then there's another channel here that has had all sorts of touches. In between those two channels, you get a really sort of textbook looking rising wedge. Right? So you got this thing and you got this thing. And so, the way to read this bullishly would be, this is not a 1 2 3. You'd have to go back and figure out that that's a wave 1 up, a 2 back, a wave 3 up, a 4, and then a 5. Um, you could even draw this diagonal a little tighter if you came through these first two touches here, like that, and ignored this sort of underthrow. In which case, on the rollover, we sort of fell below it and then back tested it. So that's the bullish scenario. Um, And like I said, so far you can read this as a 1 2 3 4 5 3 up, and then another. Well, let's just look at this on the tick chart because this is kind of important. So you could view this as 5 waves down, 3 up, and then looking at this move here. This move here, we've had a 1 2 1 2 3 4 3 4, and then a 5. It looks like this 8 o'clock sell was a rip, the sort of the conclusion of the wave. However, since then we've been in this range down here, and I think what's acting as resistance is the lows to lows extension off the bottom of this first wave down. So if tonight this makes a run across the range and makes a new low and even hits this target down here, that would sort of change the look of everything in this blue channel here from corrective, from a 5-3-5 to just a simple 5 wave move down. 1 2 3. This would be the 4, and then we would get a 5 in the overnight. So 5 waves down could still be corrective. It would just imply a larger, longer correction where this is, we could have a 5 down and then a 3 up and then another 5 down. But for bullish scenarios, it would be simplest if we just went from here and didn't make a new low and didn't create this potential 5-wave structure. So that seems to be the bullish scenario. There's definitely participation on this long from lows. I can't believe that it could be this easy. I'm just very suspicious of this whole setup. It's like shooting fish in a barrel, but I mean, I can't complain. So, the bearish scenario is, let's go back to the hour chart, is that we've simply had a series of 3-wave moves up. I mean, we had a 5-3-5 into, say, a W, a 5-3-5 into an X, and then a 5-3-5 into a Y. Pretty straightforward. And so, I think bears really do want to see this lows to lows extension trade tonight and make a new low, which would give arguably a 1, 2, 3, 4, 5 waves down. I think that's kind of important for the bearish scenario. I mean, this a fourth wave could come all the way up to here. As long as it doesn't overlap, it could still be a fourth wave. So bears want to see 5 waves down. They have to see 5 waves down. So if we overlap this, or without making a new low, then this would continue to look like a corrective 3-wave move. And it is common for corrective moves to do this thing where they trade an initial setup to a 618 target. I didn't draw that precisely, but the high, we ticked into this 618 target. I understand there's another target there as well, the 236 of this second move, but I think this original 618 target was the top to this tick, which again tends to give the thing a corrective look. So that's pretty straightforward. The bullish scenario is a leading diagonal, and now we're in a wave 2. Even if this, even if we move up tonight and this looks like 3 waves, this correction can extend. Back in 2018, well, let's just look at it. Back in 2018, the last time we made a, what am I trying to do? The last time we made a swing low down here, we had a move up, and then we came back and basically retested this low. We came within 8 ticks of it. So, yield, we'll look at the yield chart, but yield has not traded its short from highs. So yield has further to run into resistance. And so if that's the setup that matters, then this correction could go deeper. We could go 3 down, 3 up, and then another 3 down. The other thing I should mention while I'm thinking about it is that if this is a leading diagonal, if this is a 1, 2, 3, 4, 5 up, we're looking for a big ABC counter trend move. And so then the question is this simply one of A that's completed here, or is this all of A? If it's all of A, then we could be in for a chop fest of a B wave. ZB could essentially turn into a range trade for weeks or months. However, if this is just a wave 1 up and this is a wave 2, then we would be looking for the wave 3 that would give a real serious up move. So we'll just have to see how this corrective wave unfolds, if that's what it is. Does it stay at 3 waves? Does it turn into 5 waves, etc.? So I have to say that looking over here, I'm on the left now on this weekly chart. Uh, I've been thinking that this run from this side of the channel to the out punching out the other was the fifth wave. And if this trades, if this holds and we get five waves down, the fact that this wave, this green up move, is trading as a lows to lows extension off of this wave makes me think that this is a wave 1 to 4 relationship, which puts this whole structure in a different light. This doesn't look like a fifth wave by itself. It now looks like the third wave of the fifth wave. And this is really a 1, 2, 3, 4 into the lows to lows extension, and then a 5 down. And if we look at the yield chart, if we go say to the 4-hour chart, we made this low. Here's everything coming off of the low back here, and this is the low from early December on yield. And so, there was a 5-wave move up in this channel. It basically went like a 1, 2, 3, 4, 5, and then we had this corrective move. And then there's a pretty clean 5-wave move up in this channel, 1, 2, 3, 4, 5, and now we are chopping around in what looks like maybe a wave 4. So between this channel being 5 waves connected by this corrective wave, and this channel looking like 5 waves with this sort of corrective wave happening, it does seem to open the door to a new high. I've gone through the other structure before, so I'm not going to recap it. I'm just looking specifically at everything since December. This would be a wave, this would be a wave, and maybe there's room for one more. And on price, this would turn this not into a fifth wave, but the third of the fifth, and this would be a 1, 2, 3, 4, 5 down. So we will see whether bears can turn this into 5 waves down. That's step number 1 for the bearish scenario. The last thing, if we go to the yield chart, the scenario where the low is in, but we have a deep correction down here somewhere, basically a retest of the lows like the 2018 scenario. The reason that might happen is that yield hasn't traded up into its short from highs yet. We sort of front ran it today. The 50% short from highs is this black line. And so maybe this setup matters to the market and they want to push yield up to its 618 line or even beyond into its, I call them stealth fib resistance zones, which is this gray box up here. And I have an alert in there. And so if they push yield up to its 618 line or into the stealth zone here, I think that would make price look completely broken down here. And essentially the only reason you would be buying would be because yield was at potential resistance. So if we get a correction that comes deep like this, I think keeping an eye on potential yield resistance is the way to sort of trade into it. I was going to talk about this highs to highs extension that's holding us up on yield, but I don't have time. I'll have to save it for another video. Is that everything I wanted to talk about? Bull bear scenarios. Yeah, I mean the same old stuff. So, bears need to turn this initial move down into 5 waves, and I think they really need this lows to lows extension to make a new low. That's all I have time for. Thanks, guys.